Hello traders, welcome to another daily analysis for February 14th. Right now we are almost at 12:30 a.m. Eastern Standard Time, so about 2 hours prior to the London opening for February 15th. So let's get into it to see what happened today. Today we start with inflation data from UK in a London session. Expectations were positive as the sterling, as mentioned, dropped significantly since Brexit. So the inflation should have kept up more, to pressure Bank of England to raise rate if that's the path that we are going to go. However, the result was lower than expected, and we saw a selling into British pound. Now, this is a pure sentimental move. The reason is because if you're looking at the bigger context, the inflation data from UK had been picked up ever since the Brexit, and the inflation data actually reflect this underlying condition of UK. We also have the highest inflation rate today since June 2014. So there's no doubt that the inflation is going up, and economists predict that it can very well reach 3% by 2018 or 19. So if that's the case, then Bank of England really have to re-examine their policies, because if that's the case, while all the economy fundamental side is still very solid, then they will have to raise the interest rate. But if that's the case and the economy deteriorates further because the inflation maybe discourage consumptions, then their hands are a little bit tight, because then it will be a tricky case whether they are going to cut or raise. Then we don't know that. But just to let you know that although you do see a selling into British pound today, it's not, and it's because the inflation report. But it's not because the inflation report is bad per se. It's just because the expectations were a lot higher than what it is. So it's just a sentimental move for the British pound. And after that, we have the GDP quarter from Eurozone. That was also lower than expected. And if you break down, because whenever you look at the Euro data, you have to break down just at least to see the major countries' performance. So the GDP composed by all the Euro members, and Germany and France, the GDP growth has picked up. Spain was unchanged, but Italy was slowed down. So again, the tricky part about Eurozone is that it's always a big family members that everybody is together in this big pot. So it's hard to really make something that fits everyone, and that's the biggest trouble for ECB right now. But if you look at this data, for me, the side note is just show you how important France is, right? Because right after Germany, it's France. But it's also show you what's the stake right now for the French elections, because it's going to be a way much. I know people talk about Brexit back in 2016 as if that's the end of the day or the end of the Eurozone. That was really not the case at all, because Britain was always half in, half out, right? But for France, this election, I think it's even more risky, even more dangerous for the Eurozone. Because if they vote Le Pen, if France decide to have the France exit, that will be a much catastrophic result for Eurozone. That will, as I keep mentioning, will pretty much be the end of Euro. So because of that, while we are leading to that election, I think the volatility or the negative sentiment will continue and will be a much volatile event for Euro dollars. In New York session, we did have the PPI and core PPI data, and again, the all the fundamental side of US has been quite positive. The data once again is very solid, but that was not a big mover for US dollar today. The biggest mover, of course, is Janet Yellen's testify in front of the Congress today, and that was the main catalyst for the market. Basically, what happened is that Janet Yellen say that the Federal Reserve is still looking for the forecast that they gave out in December 2016, that they still think there's going to be 3 rate hike for this year. And she also mentioned that it is not good if the Federal Reserve are too slow to raise the interest rate. Now, one thing I need to mention here is that there's nothing new about what she said. Everything has been told in the previous, not only the statement, but whenever she had appearance, everything's the same, right? But the biggest difference is that it's very rare to hear Janet Yellen to give this kind of talk, because she is being known to be a little bit dovish. So for her to say that we should worry if we don't raise interest rate fast enough, and yes, there should most likely be a 3 rate hike. For her, a dovish chair to say it in public, especially today in front of the Congress. So the context, if you're looking at it in the bigger context, it is a much important confidence for traders and investors to know that Federal Reserve now has a really high possibility, because Janet Yellen she doesn't give out this kind of speech she doesn't give out this kind of speech lightly, right? She's very, very cautious about what she's saying. So for her to give out this kind of stance, basically she's saying that, most likely there will be a 3 rate hike if the fundamental data continue to be solid, and most likely, it's not good to raise the interest rate too slow. It is not good to raise interest rate too slow. That is, economic point of view, that's true, because if the inflation have picked up and the Federal Reserve is too slow to act, then you have to tighten the market faster. That means you have to raise interest rate faster. Then of course that's gonna cause a lot of that's gonna jeopardize the economy. Just imagine that people having a mortgage rate, and suddenly your mortgage rate just jump up, right? So that's just one of the examples. So that's why whatever she say makes sense, but it just, the sentiment itself, it's a very strong force today from Janet Yellen. So of course what happened is that US dollar has been largely bought off, and the risk sentiment have picked up today, and the equity market closed high again. And oil market, although not really positive, but found its support, and all the US dollar pairs have been a great surge today for US dollar. So tomorrow she is going to testify again in front of the Congress. Today she testified in front of I think it's either she's going to testify in front of because the US have 2 parliament systems, so either one or another, she's going to testify again tomorrow. And that will be another catalyst. People are expecting her to pretty much repeat the same thing, but the interesting part will be the Q&A sessions. So that's what happened to the market right now, and because of that, we have a lot of accompanying movement. Gold has been sold off. You see the bond yield has gone higher. Asian equity market also gone higher, and that's just all accompanying correlation for a strong US dollar. And that's why I say the oil market, although benefits from recent sentiment, did not really go too high, because it will be pressure from a strong dollar. And that's pretty much it. Another side note is that the negative sentiment from Donald Trump, remember 2 weeks ago, last week, has completely shifted to a much positive tone. So from today, Japan Prime Minister Abe gave out a comment today in Japan. Basically, people asked him what had happened to the summit between him and Trump. And basically, he said that Trump had shared his view on the monetary policy is not a forex manipulation. So this is a contradictory to what Trump had said before, when he had publicly attacked Japan, Europe, particularly Germany and China, about their currency manipulation. So now this has completely changed from what Donald Trump had said before. And also Monday, the meeting between him and Justin Trudeau had also been very positive. Back then he said he is going to completely rewrite NAFTA deal. He is pretty much going to eliminate it. And at the press conference, he said he only going to tweak it. So this again, it's a contradictory comment from what Trump has said before. On top of that, two positive force is that he's going to give out a tax reform plan and the elimination of Dodd-Frank regulation. These are all positive booster for US dollar and a general sentiment. So this sentiment is important because what's been stopping US dollar since 2017 has been Donald Trump, because the fundamental data is very consistent. It has been very solid. So really what's pressure, you can say a sort of the roadblock, have been Donald Trump. Now, why isn't he giving out any sort of economic comment anymore? I think largely because White House is having this trouble of Michael Flynn, again with this Russian relationship. So that's really the main focus, and he is going to focus on the tax reform and Dodd-Frank regulation right now. So he is not going to. I don't think he's gonna make any more comment about currency manipulation. Since he had already met with Abe, he had made phone call to Xi Jinping, Prime Minister of China already. So most likely not going to see any more comment about that. And if that been removed, then of course US dollar is going to revert back to whatever the fundamental strength is, and that's is looking to the upside right now. So my personal view for the market right now. For euro dollar, I think euro has been sold off today, of course, because the dollar strength. But for euro, right now you have this French election. The ECB QE program continues to pressure the euro. Greek debt issue is most likely not going to be solved. People were expected to that the Greeks to reach a conclusion with the lenders by next Monday, because we have the monetary meeting. We'll have the ECB something like a very important meeting next Monday. People were expecting that the Greeks will meet agreement with lenders, but that's not the case. And really, I think this thing might drag out for quite some time. And that's just the natural tendency of what had happened in 2015. So the bigger picture is that Eurozone has a lot of uncertainty from the election, from Greek debt, and now today the GDP data has not been too promising, because that was the only thing that backed up the euro. It was that the fundamental data have been quite promising since 2017. Of course, today the GDP was a bit setback. So now you have this fundamental weakness and sentimental weakness all happening in Eurozone. So that's why I think euro is a very weak currency right now. And on top of that, strong dollar will further pressure euro down. Now for dollar, of course, as I mentioned, as long as we don't have a fresh new negative sentiment from Donald Trump, we should see dollar revert back to its fundamental picture. And right now, it's very, very solid and strong. So that's why I think dollar is going to go up further. For British pound, people were a little bit disappointed by the inflation data. But again, looking in the bigger context, it is still in an inflationary environment. So as long as that continues, we couldn't really say whether UK will cut interest rate. On the contrary, they might actually raise interest rate. But because the uncertainty of Brexit as we are approaching March, for pound, I just don't have any clear direction. So for me, British pound remain to be a currency that I will either buy or sell against something that's very weak or strong. So many of you know I'm still in this pound Aussie short. And that's because I'm very bullish in terms of Australian dollar. So that's the only case I will get into British pound in a daily perspective. Otherwise, it will be pretty much remain as a intraday trade currency for me. Canadian dollar continue to be a quite strong currency for me, because fundamentally, OPEC still reached that agreement. The compliance is looking very well. And internal economy situation for Canada itself also has been quite well. So that's why I don't have any reason to sell it. On the contrary, I do have a lot of reason to buy it. Now, the roadblock for Canadian dollar, of course, is the oil market, and the roadblock for the oil market is the strong US dollar. So that's the risk right now, is that if the US dollar continues to go up, that will pressure the oil market. On top of that, the global oil demand is still quite weak. So although it's good that the supply has been curbed, but the demand side is not picking up. So that's something you need to concern about. But other than that, another good sentiment, of course, comes from the meeting between Trump and Trudeau. I think because 70% as U.S. as the largest trading partner for Canada, as long as that relationship can continue, I think it shouldn't be too much worry for Canada. As I mentioned, that right now the correlation between the oil market and Canadian dollar will be detached a little bit, especially if the tax reform really come to a spotlight. Then we will have to see exactly what kind of border tax that US is going to introduce. Because if that's the case, then really for Canada, if they can get a better deal, then their oil sector will be beneficial. So that will they basically they will remove this kind of risk from whatever happened in the OPEC. So I'm still quite bullish for Canadian dollar right now. For Australian dollar, it's still a very positive sentiment, a positive fundamental currency to buy. Now, the current risk on sentiment, of course, is going to help all the commodity currencies. For Australian dollar, very simple statement is that the Australian dollar has been fueled up mainly by the RBA, because the central bank has given out such a tremendous confidence toward their own economy, regardless of the fundamental data. Because if you're really looking at the fundamental data, it has not been well. The GDP had been quite disappointed last time. The employment has been very soft, to a bit of a negative side, and the inflation hasn't been picked up. So if the three major fundamental data from Australian have not been too good, then what's really caused Australian dollar to go up is the sentiment. And who is the biggest sentiment booster is the central bank itself. And the second is the China, because the Chinese economy continue to grow and the demand for commodities continue to go up. We also have a new high for iron ore. So that could be a speculation, but that could also be an actual demand. Nevertheless, understand what's been causing a surge in Australian dollar had been this kind of sentiment. Now, if a currency goes up because of the sentiment, then the biggest risk is the bubble breaks, because that means that sentimental bubble will be built up to a point that it couldn't be inflated anymore and it will burst. So once that bursts, you might see Australian dollar drop, and that's the biggest worry if you are long in Australian dollar right now. So tomorrow we will have the employment data from Aussie, which again is expected to be negative. So unless if that one can give us something that's a little bit positive, then that will give us a much better confidence for Australian dollars. Otherwise, you will have to wait for the GDP on the end of this month. And if that can be positive, because RBA is saying that the GDP data should be positive for the next quarter, the next release. So if that's the case, then Australian dollar will be a strong currency. But if that's not the case, then you really have to worry, because then the fundamentals have been in a contradictory picture than what the central bank is saying. So at the end of the day, fundamental always will take the lead. So once we don't, so basically we have to see some sort of good fundamental data from Australia in order to justify the bullish sentiment for Australian dollar. And since we don't have that yet, so that will be the biggest risk. For New Zealand dollar, New Zealand dollar is very interesting because it has a completely opposite picture than Australian dollar. What happened to New Zealand dollar is that they have a pretty good fundamental picture, but the central bank have no confidence toward their currency. So completely opposite than what happened to Aussie. And again, everything will revert back to fundamental. That's my belief. So I think central banks can try their best to talk down their currency, but at the end of the day, the data will speak louder than anything else. So as long as the New Zealand dollar can continue to produce a solid fundamental picture, then I think New Zealand will find a support and will resume the track to the upside. So that's the thing you need to understand, that the current selling into New Zealand dollar is really fueled up by RBNZ itself. It's not because their economy has turned sour. So that's something. That's why I'm still kind of quite positive about the New Zealand dollar, because the data. So if all things are equal, I'm more positive than into New Zealand dollar than Australian dollar. But I do understand the strength of the sentiment. So that's why you don't want to get caught up, to catch in the falling knife, because sometimes the sentiment, which is the market belief, it can go very, very far. The market can stay irrational for a very long time. So you don't want to get into a trade just because the fundamental is in your side. You really have to get into at the right timing. Otherwise, you will get hurt badly from trading against the market. So for Japanese yen and Swiss franc, again, they both are neutral right now, but because the current risk on sentiment, they both have been pressured to the downside. For Japan, I think they are very happy right now to see their currency being sold off, because right now it's not their own, so-called manipulations. This is a natural cycle of the demand. So I think Japan it's going to just be a very passive currency right now, and as long as the current sentiment continues, if you hear anything about tax reform, things like that, it's good for the global economy, then Japanese yen will continue to go down. Again, same thing to apply to Swiss franc, and they both are going to go up if we have any risky sentiment globally. So that's pretty much my fundamental analysis for the day. So let's take a look at the trade right now. So today I actually I didn't trade anything. Only after Jenny Yellen gave out a speech, I did get into an Australian dollar short. Now this is purely an intraday trade, and I'm really, to be honest, not confident about this trade, as my stop loss is very, very narrow, just above 0.77. So I got in for a very simple reason, that I think a strong US dollar will pressure all other currencies. And now, why do I choose Aussie? It's because I think Aussie is the one that has the most room to drop. And also, I think Australian dollar does not, as I keep mentioning, does not have the fundamental strength to support it. What's been supporting it is really the sentiment. So that's why my very simple reason is that I think the dollar strength will continue all the way until the end of this week, because tomorrow Jenny Yellen is going to testify again. Tomorrow the CPI data from US is expected to be positive again. So I think at least the sentiment will continue for the next few days, and that will pressure all other currencies. And I think Australian dollar will be pressured further to the downside because it has been climbing up further. Now, of course, this was not my first choice. I put a pending order and left my desk, but I got fill in at handle 76.50. Now I'm in a bit of drawdown against me. I was hoping that next session or two can see a little bit of selling into Australian dollar. Now, if they think it's still within the range, then my next fuel, the next booster will have to be the employment data, which I expect it to be a negative number to continue pressure Australian dollar in a short term. But I'm not really looking to hold this short for too long, because Australian dollar is still very strong. So at the end of the day, and US dollar still has a negative, or I should say uncertainty over Donald Trump. So I don't really want to hold this trade for too long. I'm just hoping to basically scalp about 20-30 pips if I can. But the only thing I think I'm managing lousily is that my stop loss is too close. Like the only thing I put 0.77 is because we haven't been able to break that since this year, right? So since January, Australian dollar has been climbing up, but if you look at this hourly chart, you have a surge from the positive trade balance in February 1st, and we weren't able to break above 77, and we go down. And then you have another positive data from China, but then again we failed to break 77. And then you have a bunch of negative sentiment from US dollar to help out Aussie dollar, but we still weren't able to break through. And today, people were maybe expecting a little bit dovish talk for US dollar to help Australian dollar in early Asian session. We still weren't able to break, and now we go. So you can say it tried once, twice, 3 times, 4 times already. So that means this resistance is quite strong. And on the contrary, we haven't even tried to touch 76. So that means 76 could at least should be tasted once or twice before it prove its strength. So that's my technical theory behind shorting this trade. Now I might be wrong, and most likely I'm always wrong a lot of time, and that's just the nature of trading. So I don't know where this thing gonna go. Hope it's gonna go downside, but we will really have to see what happens later on. Another trade that I put a pending order that I did not get filled is euro dollar. Now euro dollar, I'm much confident to get into this trade. My pending order is at 106. Stop loss is way above 0.750. Now the reason I use a large stop loss is because if you look at daily chart of euro dollar, I'm pretty much in it for kind of late already, right? This was the high that I should have get in. Right now you have consecutive low already. This is a strong support area. Pretty much if you are in, you're really in at the low point, and I don't have any signal to get in. So for me, this was an intraday trade as well, and I'm still putting my pending order and want to trade it as sort of like intraday trade, because 0.6 will be around a PV point level, and it will be also an hourly support and resistance here. And I'm really hoping the next 2 events, Janet Yellen and CPI data from US, will be another boost to push US dollar up. So that's my hope for doing this trade. Again, very not looking to hold this trend for more than this week. This is just a short term, you can say daily to swing trade for this bullish trade. So that's basically what I mean right now. So let's take a look at my current daily trade. So right now, first thing is my dollar trade. So my dollar Swiss and dollar yen. Now, of course, this trade has been working out well. I got in with this bullish candle, and 1, 2, 3, we are at the 4th consecutive of bullish day. But you need to watch out, as the buyers start losing ground. As you just looking at a candle size, you can know that. We also approaching very important resistance at 1.01. This is a very strong resistance area, so we should see some pullback. I'm still holding it, just because of the fundamental bias, but I do expect to see some pullback before we continue to take off. Same thing applied to dollar yen. Exactly same pictures, and we also have a very strong resistance at 115, which is also a psychological handle. So again, I'm looking for some pullback before we continue to take off. But these 2 trades, I'm literally looking for a longer term, a medium term, holding all the way until above 116 or even to 118. So that's my time frame for holding these 2 trades. The other one I have is Pound Aussie. Pound Aussie short is another one I'm in right now because of this candlestick. So basically, we are in sort of a range area. The reason I'm still holding it, again, because I do have more confidence into Australian dollar. But my biggest risk is really the next fundamental data. Tomorrow, the employment data might be a setback. I don't think it will be such a movement even if we have a negative data, because the data has been expected to be negative already. But at the end of this month, the GDP data will be very important, because that was the only reason that RBA justify of not cutting the interest rate. They're saying that the GDP will pick up again. But if GDP has failed to pick up, then you really have, I understand that Australia has 2 consecutive contraction for GDP already. So they are in a technical recession since 2016. So the next GDP, if it still fail to pick up, then that really means they are in a deep trouble. Then they will have to ease further. RBA has to ease further. Then that will, of course, not be too good for this trade. By that time, I will have to get out. But as for now, I will keep holding it at least for the next week or so, just to see what happens. Another trade I have is CAD-Yen. CAD-Yen, again, it's very nice. We again 1, 2, 3, 4 consecutive days. Same picture. You are at this strong resistance right here, about 87.50 right now. So I'm 88 is 80, just slightly above 88. It will be my target area. Still below this 88.50. I do hoping and expecting to reach that. Of course, if we can reach that before we have any retracement, that would be ideal. But it does look like technically we should have some retracement since we are so close to this double top area. But fundamentally, the bias is very strong for me to be in favor for Canadian dollar over the Japanese yen. So really, that's again the trade I'm planning to hold for as long as it takes to reach my target. And New Zealand dollar, it's my other trade. It's not really a strategy I use too often. Again, I'm just getting it because I still very favorable for New Zealand. Because of the dollar strength, I'm kind of worried right now. I didn't expect Jenny Yellen to give such a strong statement today. So that's what gets me worried for New Zealand dollar right now. If that's the case, if tomorrow again we have another strong statement for US dollar, then maybe I will get out at break even. But I will have to see because New Zealand dollar has been able to hold on pretty well so far. So we will have to see what happens. But I'm less confident about this trade right now. Okay, so let's take a look at our 28 currency pairs. Just give me 1 second. All right, so Euro Pound. Now Euro Pound again. It does look like it's gonna be in more favor to British Pound, but this is not a pair I'm getting. At least not at this area. You can tell you're very close to this support, and there's no fresh catalyst to drive this thing further downside. They both are, not particularly strong or weak. It's weaker for Euro dollar for sure, but British Pound is not particularly strong or weak. On top of that, I don't really personally want to get into any British Pound trade, as I mentioned, in a daily perspective. Euro Swiss is not something I want to get into it, but I'll just show you the chart. There's nothing here. Euro dollar is just something I truly want to get in, but I'm kind of late on the table on the game, so looking to trade in different kinds of way. But fundamentally, it has a very strong bias. Now, Euro Aussie is something I got in already out of this bearish candlestick signal. So, many of you people say that's shorting at the low. That is absolutely true. This is more like a breakout system. Now, if you want to short at low, just make sure you have a wide enough stop loss, because the last thing you want is to get in and see some a little bit of retracement to stop you out, only for it to go in your way. For me, that's the worst, psychological effect. So I always not afraid to give myself a much wider stop loss. Now, whether we are at the low or not, you have to go to weekly chart to see in the historical sense. And if you can see from historical sense, not really. We're low at 1.15 in 2012, 2013. So there's still many rooms to go for the historical perspective. So this is something I'm still confident to hold it. Euro Aussie is something I'm in. I'm also looking to short Euro CAD, Euro New Zealand, but we don't have signal here. Euro New Zealand, I don't have a signal here, so we'll just wait. Euro Yen is not something I particularly favor to do or not. Again, let's look at British Pound. Pound is not something I will get in the daily perspective. A lot of people will get excited because this bearish signal. You could get in this because US dollar is very strong, but just understand that these two currencies both has a possibility for rate hike. So even though US has a much better fundamental picture, but UK also has a pretty good fundamental pictures. And US has a possibility for rate hike in 2017. So does British pound. So what's the biggest difference? Of course, is the sentimental uncertainty. The UK is facing a Brexit, whereas US does not have that kind of issue. However, we do have a protectionism sentiment from Donald Trump. We also have this kind of border tax plan, which is also comes from the protectionism from Donald Trump. So if you really want to compare apple to apple, I do think US does not really have a such a tremendous positive sentiment than UK. So it's not something I couldn't really find a particular strong or weak sentiment to get into it, nor do I have a strong fundamental to get into it, because a lot of people are bearish for British pound, but that bearish really hasn't been able to find a fundamental ground, because fundamental data has been contradicted to whatever people were expecting for British pound. So that's why this is not something I will get into in the daily perspective. Same thing as pound Aussie. I don't have any. I'm in this one. I understand that, but it's just purely because we do have a nice signal, and I'm more favor for Australian dollar than cable. The reason is because Australian dollar has a less sentimental uncertainty. On top of that, it is a much higher yield currency than US dollar and British pound. So that's why you can justify to hold it. At least a lot of people would like to make this kind of carry trade or yield trade, but it's not again something I'm too confident about, to be honest with you. And that's why I say this trade, if I don't see any result in the next week or two, I do want to get out, or even maybe for earlier than that. Pound CAD, again, not something I want to get into, same as Pound Aussie and Pound Yen. Pound Yen, you do have this nice kangaroo tail. Again, it's not something I want to get into in the daily perspective. Swiss franc Japanese yen, I don't have anything to say about this pair. Dollar Swiss, I just showed you already. And so let's talk about dollar CAD. Now, dollar CAD will be interesting because, again, a strong dollar means a weak CAD, not only in the sense of currency pair, but also in the sense of oil market. But it looks like we are still below this 200-day moving average. We are still making a lower low, lower high. So that's another reason why I'm saying I'm a lot more bullish in Canadian dollar than other currencies. Aussie Swiss. Now Aussie Swiss is something I also want to get into. Again, you have this nice bullish candlestick signal. Again, everything you are buying here is buying at breakout. You're buying at high. I understand that. So when you're doing this thing, you just have to go to weekly to see if you have any more room to go in a historical point of view. And of course, you do have a lot more room to go. In fact, if you're looking at a weekly, you are still in the oversold area below this 200-day moving average. So no problem for me to trade breakout just because there's a lot more room to go in the upside. Same thing as Aussie Yen. This is another thing I like to get into it because, again, you have a lot of room to go in a historical point of view. You have a nice, solid, bullish engulfing candle. Aussie dollar, this is the one I'm in intraday perspective. As you can see, 0.7 it's 0.77 is quite strong, but that does not mean it will not be breakout. On the contrary, it is very much likely should be broken out because you are at a strong uptrend. Yes, you will have stalled a little bit only to break out, and now you stalled range bound a little bit. It will break out if you're just looking at a technical perspective. But I do hope before it breaks out, at least it will try to touch a lower side once more for me to get out to make some profit. Aussie CAD. Aussie CAD is not something I will get into it. Same as Aussie New Z. Now Aussie New Z, of course, you can't buy it, but you are way too late if you're buying right now. I do expect a little bit pull up on in front of the negative Australian fundamental data if we have any. Then we have to re-examine, because again I'm way much. It's very interesting because I'm way much bullish than in New Zealand dollar than Australian dollar, but the picture technically is not that case. So that's the thing I would say, that don't trade with one single dimension. So even if you think certain currency is very strong fundamentally, if the market is not ready to buy or sell, then don't be the pioneer to do that, because you might feel like you're gonna make a lot of money to be the pioneer, but most likely than not, you're just gonna get killed. You're just gonna catch a falling knife. So for me, it's really, give market some time to let it revert to the fundamental perspective. CAD Swiss, again, something looking to long, don't have any signal. CAD Yang is the one we are in already. New Zealand Swiss, something I'm looking to long. New Zealand dollar, I'm long in this one, but not looking to hold it for too long. New Zealand CAD, I'm not looking to do anything about this one. New Zealand Yen, also looking to buy if we have any signal, which we do not have for today. So that's pretty much it, guys. A very interesting picture, especially for US dollar. Just to let you know, the market, right now we're still in February, right? It just feel like it's been a long time, but it's because such an interesting sentiment nowadays from all the political situation from world leader, and no country are immune. Eurozone has their own political turmoil. US certainly is the drama queen right now. Same as UK, same as Canada, even Australia, New Zealand, and Japan has been it's a global economy, right? No country can be outside from this kind of influence. So we'll see what's about to come tomorrow. Watch out for the taste fight for Jenny Yellen again to see if she can boost US dollar further. Other than that, let me know if you find this video helpful. If you have any question, feel free to ask me. See you tomorrow with another daily analysis. Thanks for watching. Bye-bye.